Hi friends, welcome to Insurance Decoder, and in this video I will tell you about the truth of term insurance. Friends, term insurance is very popular these days because it is the real life insurance. So everybody wants to take term plan or the term insurance plan or term life insurance plan, whatever name you give it, all have the same meaning. So now you will be asking that whether buying a term plan is right or it is a wrong decision, or you should invest in the traditional insurance plans. Now you may be asking that what are the benefits of the term insurance plan and what sum assured you should take for the term insurance plan, and what should be the policy period, and how practical is this plan. So these are the questions which may arise in your mind. I'll be answering all these questions in this video with practical examples, and after watching this video all your concepts related to term insurance will be clear. दोस्तों ये वीडियो अगर आप हिंदी में देखना चाहते हैं तो लिंक डिस्क्रिप्शन बॉक्स में दिया हुआ है, वहां से देख सकते हैं। पूरा वीडियो हिंदी में देखें हमारे दूसरे चैनल पर। Let's start. For this term insurance plan explanation, I will take an example. And friends, these are the three friends, Love, Sameer and Robert. All of them are 30 years old. They studied in the same college and they are working in the same company, earning equal salary. This is our hypothetical example which I am taking to explain you about the term insurance concept. Now what happens, that Love, Sameer and Robert, they are earning the same salary and they are married, they have kids, and they have taken a car and house on loan, and they are paying EMIs for the car loan and housing loan. So they all are having the similar conditions. Now what they do, Love, Sameer and Robert, from their savings, what they do, they save around 10,000 rupees every month. So out of this 10,000, Love invests in mutual fund and FD. Entire amount goes in mutual fund and FD. He feels that mutual fund and bank FDs are the safest investment and he will be getting regular return. Okay. On the other hand, Sameer invests 9,000 in mutual fund and FDs and 1,000 rupees in term insurance plan of 75 lakh. So he feels that he shall go with the term insurance also, and simultaneously he will be investing in mutual fund and FD. So this is the Sameer's investment strategy. And when we talk about the Robert, he invests 8,500 in mutual fund and bank FDs and 1,500 in term insurance plan of 1 crore. So Love has not taken any insurance policy. Sameer has taken a term plan of 75 lakh. Robert has taken a term plan of 1 crore. And their investment strategy is given. Now if we see that the return on the investment will be around 10%. So Love will be getting 10%, Sameer will be getting 10%, Robert will be getting 10% on their investment. Because for Love, entire 10,000 will be earning the return. For Sameer, this 9,000 will be earning the 10% return. However, this 1,000 will not be getting any return because it is being invested in term insurance plan. For Robert, this 8,500 will be getting return of 10%, whereas this 1,500 which he has invested in term insurance plan, it will not fetch any return. Now what happens if we take the 10% return and the amount they have been investing, and if they keep investing for 15 years, then their corpus after 15 years will be, for Love it will be 41.79 lakh, for Sameer it will be 37.61 lakh, and for Robert it will be 35.52 lakh. So the corpus is slightly different because for Love it is the entire amount he is investing, so his corpus is higher than Robert. He is earning 6 lakh more than what the Robert is earning. Now after 30 years, their corpus will be, for Love it will be 2.28 crore, for Sameer it will be 2.05 crore, and for Robert it will be 1.94 crore. So you can see here that here in this case also, at the end of 30 years, Love is earning around 34 lakh more than what the Robert is earning. So now at the end of 30 years, they will be retired because they have reached the age of 60 years, and now they will be enjoying their retired life with this corpus they have earned. So in this case, if we see, nothing has happened with them, and the corpus love is getting around 36 lakh more. So this 36 lakh he will be getting at the end of 60 years when his entire liability has already gone. But this is not the real life conditions, friend. This is the happy life, and sometimes these happy incident may or may not happen in our life, and God prohibit. So what happened with them? They were en route to celebrate their 45th birthday on a hill station. All of them and went in a car and to celebrate their 45th birthday on a hill station. Suddenly on their en route, they met with an accident, and all of them died in the accident. So in this case, what will happen? Here the questions will arise that they have gone, but there will be many questions which needs the answer, like who will pay the house EMI, who will pay the car EMI. If they will not pay the house EMI or car EMI, the bank people will come and they will take the possession of the house or the car. So the car and house EMIs needs to be paid regularly. How about the children education, the family management, and how about the marriage expenditure of the kids? And how about the regular household expenditures? How the family will manage because they were the sole earners in their family. Now these questions needs to be answered. For that we see that what will happen with them, because they have been investing regularly, they have made some corpus, and how their family will manage with that corpus. So Love, Samir, and this Robert, they have been investing, which we have seen already, so I'm moving it a bit faster. So this is the condition which I have already explained, that Love was investing 10,000 rupees, Samir was investing 9,000, and 1,000 he was investing in term insurance plan. For Robert, it was 8,500 in mutual fund and FD, and 1,500 he was investing in term insurance plan, and he had taken a 1 crore rupees term insurance plan. Now, at the end of the 45th birthday, their net worth at the time of death when they died, for Love it was 41.79 lakh. For Samir it was 37.61 lakh because he was investing 9,000, so definitely his return will be less. And for Robert it will be definitely lesser than Samir and Love because he was investing only 8,500. But stop, here comes the magic of the insurance. For Love, he has not invested anything in insurance, so he will not be getting anything from insurance company. Samir, so for Love, his family anyway managed the regular household expenditure from 41.7 lakh. But how about the child education, the car EMI, the house EMI? This will be left on the God's mercy. But Samir, he has managed, and he took a wise decision. He took a term insurance plan. So for him, he will be getting 75 lakh rupees from the insurance company. Now his entire corpus will be around 1 crore 12 lakh rupees. So here you can see the difference between Love and Samir. Love has 41.79 lakh. Samir has 1 crore 12 lakh, more than 2 times what the Love has left for his family. So Love's family will manage household cares and child education, everything they will be managing. There will be certainly some downfall in the lifestyle, but anyway they will be managing it good than what the Love's family will manage. Now comes the Robert, who was the real finance person, who knew about the term insurance, who knew about how to protect the family in case if something happens with him. And now his family will be getting 1 crore from the insurance company. So total corpus here will be 1 crore 35 lakh. Now you can see what Love is getting and what Robert is getting, because if they were not investing that time, that they if they did not die that time, the difference was around 32 lakh. But here if they have died at the age of 15 years, so in this case their family will be getting, for Love 41.7, for Samir it will 1 crore 12 lakh, and for Robert it is 1 crore 35 lakh, more than 4 times or 3.5 times what Love has left for his family. So Robert family will be easily managing their everything goes as it is. There will not be any change in the family's lifestyle. However, the death of the Robert may not be fulfilled, but he has fulfilled all the financial obligations for his family. So this is how the insurance create the magic. And if the as person it friends, it is said that life is a bubble, so it can burst anytime. We are not sure that we will be living a life, or we will be alive for 90 years or 100 years. So for our family we need to take term insurance, because for the term insurance with a small amount, like you can see in Robert case, with 1500 per month he is getting 1 crore term plan. So you can imagine for the tiny premiums you can get huge sum assured. Now we'll find out that how to find the required insurance. How you will find out that how much term plan you should take. For that I have given this formula that sum all the pending loans. Whatever the loans you have to sum them up. Add children education and children marriage expenditure, whatever you want to spend for the child education and the marriage expenses of the children. And take your monthly household expenses. Suppose you are expending around 20,000 per month, then multiply it with 12 and multiply it with the number of years remaining for up to your retirement age. Suppose if you are at the age of 38, so generally we see that people retires at the age of 60. So you will multiply that per month expenditure with multiply with 12 and multiply with 22. So you will get it, and then sum it up. And then subtract all your investments. You may be having investment in FD, mutual fund, PPF, shares, property, gold, etc. Wherever you have invested, that is already the assets you have created. You have to subtract that amount from all the above three, and then you will get your desired insurance sum insured. So you have to take at least that sum insured for your family. Let's see for an example that here the household loan, house loan, car loan, other loans that sums up to 70 lakh. And then children education that sums up to 30 lakh, and then children marriage that sums up to 50 lakh, and then household expenses 20,000 multiply 12 multiply 20 years, so it comes to 40 lakh. Now you reduce that FD, mutual fund, share, property, etc. whatever investment you have to reduce that amount, and then you will get this 50 lakh negative. So then you have to sum all these things, and the final sum assured that is required is 1.48 crore. So ideally you should take at least 1.5 crore sum assured. If you are getting 30 lakh rupees sum that term plan or 50 lakh rupees term plan, it will not be of any help. At least you should have the 1.5 crore sum assured. So accordingly, in your case, you also take the example. You should also sum up, make a table like this, and then finally decide how much sum assured you need to take. What should be your insurance policy amount? Now what should be the policy term? So generally ideally it is suggested that you should take the term insurance policy up to the age you want to work. So if you want to work for 60 years, you should take a term insurance plan up to 60 years. If you want to work till 70 years, you should take a term plan up to 70 years. So accordingly that you should decide. And generally you should take term insurance plans up to your retirement age. And but nowadays insurance companies are selling insurance plans for up to covering up to 100 years, 99 years or whatever not. So you can take the customized plans if you want. Now comes the can housewives and non-earning persons take term plans. So friends, for them term plan is not an investment. As I already told, it is an income protection plan. So whatever the loss the family has suffered because of the demise of their loved ones, earning per person in the family, for them the term plan is helpful. So housewives and the non-earning persons, they don't have any kind of financial income. So because of their death, it will not the family will not be affected financially. So insurance companies will not give them term plan. However, there are the nowadays Saral insurance, Saral Jeevan Bima has been launched, which gives the term plans for the non earning persons and housewives. I have made a video on that. You can watch that video. Link is given in description box and it is appearing also above. You can watch that video. and hence term plan is given to only earning persons, and you get sum assured in proper proportion to income only. So suppose if you are earning 5 lakh rupees, you cannot take a term plan of 500 crores. Insurance companies will decide that what is your financial capacity, what is worth of your income. Accordingly they will give you the term plan. So friends, that's all for the term insurance plan. I hope you have understood it. And please, if you are not the subscriber of my channel, please subscribe to my channel, like, share, and comment definitely on the channel. Thanks a lot. Thanks for watching. Have a nice day.